Ladies and gentlemen, kindly remain in your places. We now move on to the context-setting first plenary of the summit titled Closing the Gap as More Get Financially Included. The session will highlight key gaps that need to be addressed for meaningful and universal financial inclusion to become a reality, and also gaps in the publicly available data that need to be filled for a more nuanced and disaggregated picture of progress across various cuts and parameters. And the moderator, ladies and gentlemen, there's too much of movement. I did tell you there's no designated break. We're moving seamlessly into the plenary session. Kindly remain in your places. Can I have the main exit door to remain closed, please? Please have the main exit doors closed, please. I'll now be inviting the moderator and our speakers onto the stage. So kindly just remain in your places, please. Okay, let's give a warm round of applause to the moderator of this session, Ms. Sumita Kale, Advisor, Indicus Foundation. A warm round of applause goes to her. Our speakers are Sania Ansar, Economist, Development Research Group, the World Bank, Maya Vengulerkar, Chief Operating Officer of Crystal Foundation, Dr. Pawan Bakshi, India Lead Financial Services for the Poor, Bill and Melinda Gates Foundation, Kalpana Ajayan, Regional Head, South Asia Women's World Banking, Praveena Rai, Chief Operating Officer of the National Payments Council of India. Let's give the panel and the moderator a very warm round of applause, please. There's too much of movement in the hall, ladies and gentlemen. Kindly be seated as soon as possible so that our session can start. I now hand over the charge of the session to the moderator now, and she will also be keeping the time of the session to finish on time. And as we still have too much of noise in the hall, may I request the moderator to kindly take charge, please.
Good morning, everyone. I think we'll just get into the session. Fine. Okay, so good morning, everyone. Thanks a lot, Radhika, Vipin, for giving me this opportunity to to moderate a discussion with an absolutely excellent panel on a topic which is very, very close to my heart. India today is absolutely unarguably standing at the forefront of the financial inclusion and digital payments ecosystem space in the world. And interestingly, this has come about by a range of inputs from very diverse sources. You have proactive action from the government, from the regulator. There's industry, there's fintechs, there's think tanks, stakeholders like NPCI, India Stack, and now going forward, efforts of Sahmati, ONDC, OCAN, and so on. So where we stand today is truly an achievement of every part of the ecosystem coming together. And yet, despite all of our success, and there are lots of successes, we've heard so much in the past, in the inaugural session, there are gaps that still remain. And these are gaps which we feel can be best addressed when we have much better quality of information and metrics. Because information which industry can then use to serve specific geographies for specific customer segments, and information that the regulator or the government can use to target their policies much more effectively than they're doing right now. Now, as analysts who've been tracking financial inclusion space since 2006 at Indicus, we found data on this very difficult to come by. We've had a very high dependence on surveys, the World Bank Global Fintechs every 3 years. We've had surveys from Microsave, from Dwara Research, in the past from Financial Inclusion Insights and so on, who've given us some idea of the trends in access, usage, and so on. Very valuable reports, but clearly not enough. And though the Reserve Bank is actually the best place to give us a truly comprehensive national database in real time, actually, what we have is just one single table in the Reserve Bank's annual report, and which maps the progress of financial inclusion. It gives a snapshot at the national level of very few parameters. And in recent times, this table has also been, has had a very cryptic footnote, which is made for many more questions than actually it's answered. So for something as basic as the number of business correspondents in India, we've had the number going up from 1.6 million BCs to 3.5 million over 1 year in March 2022. And the footnote just tells us that significant increase in data reported by a few private sector banks. Now, for analysts like us, this footnote has, like, it just has us asking for way, way much more. There is no additional information that's provided. And of course, we have no details on the status of activity, on dormancy, on gender, and many more important variables. In 2021, the Reserve Bank also set up a composite financial inclusion index with 3 sub-indices measuring progress on access, usage, and quality. There are 97 indicators, which they've said incorporate granular data on banking, investments, insurance, postal, as well as the pension sector. Now, though this is released annually, again, this would have been an amazing resource for all of us, given us great insights. For instance, the sub-index quality also apparently covers inequality and customer protection, but the details here are extremely sketchy. All we have in public domain is the aggregate index and some values of the sub-indices. So the value of the FI index for March 2022, for instance, was 56.4 vis-a-vis 53.9 in March 2021, with growth across all sub-indices. So again, it's a bit disappointing. Now, India being the large heterogeneous country that we are, the more granular the data, the more the insights, the easier it is to pinpoint specific issues for different classes of customers and consumers at different locations, and then you can provide the solutions appropriately, right? So where we are here today is to discuss where we stand on the data challenges and how we as an ecosystem can take this forward. The goal, of course, is universal and meaningful financial inclusion and where we can all fit into this. We'll begin with Sanya presenting a few very key insights from the Global Findex 2021. My questions will be for all panelists, will be as brief as possible so that they'll get time to give us their experience and views. Sanya.
Thank you. Good morning, everyone. I guess it's already afternoon. I'd like to thank Access for the invitation to join you all today. And we have an expert panel with us today, and lots of practitioners in the audience. So I won't go over a lot of the specifics of the methodology of how we collect this data, but maybe a quick reminder that this is a demand-side survey and it's a global survey. But today we'll just talk about the data from India, and we look at access to and use of financial services for individuals around the world and in India. So we've been doing this for about 10 years, and we have 4 rounds of data. The most recent data was launched in 2021. So we'll talk a little bit about that and some of the gaps in access and usage. So first off, we know that account ownership in India stands at about 78%. This was also discussed in the panel earlier today. And India has done an exceptional job in the region in closing out the gender gap and the income gap, which you can see here. Men and women and poor and rich have the same number of access or same access to account ownership. So the biggest challenge that's left now is around usage. Usage overall has been low, and so about 40% of adults are using or 40% of account holders are using their accounts, which is quite low compared to some of the other countries around the world. And then we also see that it's inequitable. So men and women and poor and rich do not have the same level of usage. And we've seen these gaps being consistent and sort of stagnant for the last 10 years, or ever since we've been collecting this data, and they have been quite sticky and haven't moved. So we're trying to explore what really is causing these barriers to usage and why usage is so low in India. Just giving you a quick background again, when you look at this figure here, you'll see that about 19% of adults in the country are receiving some kind of payment. So these could be called passive users of account. And these payments could be, primarily these payments are DBT, so government transfers, but also wages that they receive from their private sector jobs, or someone sends them money from another part of the country, or money they receive from the sale of agricultural products. Only half of these adults are actually using their accounts in other ways to make other kinds of payments, or only a quarter of them are using it to borrow formally or saving formally. And these numbers on the right are significantly lower than what we see for some of the other countries that are at par with India's level of access around the world. So the biggest challenges that we see now are around inactivity or people not using their accounts. About a third of accounts in India are inactive, which means they're not even passive users, they're just not using their account for any purpose. And compared to the developing economies on average, this is fewer than 5%. What you see on the figure on the right, we went around asking people in India, why aren't they using their accounts? What's the biggest barrier? And we find that a lot of them say that they don't have access, don't have enough money to use their account. But this is usually intertwined with other reasons. And a big barrier that's been reported is that financial institutions are too far away, or that they don't trust financial institutions, which again is one of the cornerstones for a lot of financial service providers. And it really highlights the space for building more accessible and strong business correspondent networks, strong payment systems. Of course, we also find gaps in gender, so women are more likely to have an inactive account. And then they're also more likely to say that they don't use their account because someone in their family or someone else is already using it on their behalf. And this really indicates the shortage for more women-targeted financial products in the country. And finally, lack of financial confidence. So just inability to, or discomfort with using their account, or inability to understand different features of an account seems to be a highlight. And it is often more reported by men. This could also be because men are more likely to use their account for a variety of purposes, but we see this coming up. But at the same time, we also, in our data, captured some of the advances that we've been talking about in the first half of our day today, where a lot of advances in UPI systems or digitalization have been captured by this data as well. So first, maybe quickly talking about merchant payments. So a merchant payment is a payment that you would make in a store or for an online purchase, and would be through a card or a mobile phone or using the internet. And we find that this is one of the higher, India outperforms some of the other countries in the region, but also globally. And at the same time, we found that during COVID, a lot of people switched over from cash to digital merchant payments. In fact, majority of the growth that we saw has been because of the digitalization efforts that happened during COVID in the last 3-4 years. Similarly, also driven by the Bharat Bill payment system, we see a lot of new adults making payments for utility bills through online systems. And this is really picked up in India, but also in some of the other regions. But if you see in the figure here, there's still a significant number of people who are making their payments in cash. And again, the challenge would be to bring those on into the system, but also to capture more women and more poor adults into this group, so as to make overall access more inclusive. This is important for a variety of reasons, but of course, for individuals, it allows them to make payments in a safe and an efficient way, but also for merchants or for people to build transaction histories of digital transaction histories, where they can use these to access loans or to create bank accounts. So all of this builds into this larger financial infrastructure or financial intermediation that is important for India today. So I'd end here, and we have an exciting panel, and I look forward to the discussion through them.
Thanks a lot, Sanya. The Findex actually is is extremely data rich. So for keeping it brief and for all of us to just go back and read the report with even more insights into it. CRISIL, Maya, I'll come to you. CRISIL has also been bringing out a CRISIL Inclusix, Financial Inclusion Index since 2011. Can you just take us through what it has been over the last 10 years for your journey? And we understand that the latest release is still forthcoming. So if there are any insights that you can share from your ongoing work.
Sure. Thank you, Sumita, and thank you, Access team, for inviting CRISIL here on this forum. So already so much of data has been quoted. Sumita, to your point, the real insights, start revealing, once you start getting deeper and deeper and more granular. And in case of India's financial inclusion space, I would say that a lot of insights are hidden, when you go into deeper geographical units. And that's the unique feature, I would say, of CRISIL Inclusix. Of course, Inclusix is index which measures the extent of financial inclusion in India at a district level. It is largely, I would say, supply side index, unlike Findex, which is purely focusing on demand. It is so the granularity. So first we look at district level numbers, and then we construct the national level picture. So it's a bottom up kind of a process that we use on a scale of 0 to 100, where 100 is the maximum achievable score. And it's calculated on 4 dimensions: branch penetration, deposit penetration, credit penetration, and insurance penetration. So 4 dimensions to the inclusives. Of course, we have also calculated district level pension index, but we have not added that dimension into the overall inclusives composite number, because the numbers are still very small and that may just skew the picture. That's why we have kept it as a separate chapter in the overall inclusives report. We source the information from 4 different regulators and one SRO. So of course RBI, largest amount of data actually comes from Reserve Bank of India's portal. We source insurance information from IRDA, MFIN data on microfinance led credit penetration, and PFRDA. So these are the sources of our information, and it's been 10 years, it's been a decade since we have been publishing this Inclusives. 4 editions have been released so far. The latest one is still not out, and I will talk about some of the reasons, but the data is primarily the challenge, because of which the latest edition, I would say, is still in the works. So this is by way of quick context. Looking at the 10-year journey, if you look back at this decade, I would say that there are uh, 3 watershed moments, for India's financial inclusion space. One, 2014 launch of PMJDY, 2016 demonetization, and 2020, of course, the COVID, which have significantly impacted the financial inclusion space in the country. So if you look at, how, and that's why the inclusive score also reflects, shades of these 3 developments. So in terms of, what the data is unveiling, and I'm not going to get into specific numbers, but I'm going to stick to qualitative insights. So if you look at, from the, of course, there great strides have been made. So the overall inclusion inclusive score for the country has improved significantly in a 10 years span. Uh, but first half of this decade, the inclusives was mainly driven, or the improvement to inclusives was mainly contributed by deposit penetration and branch penetration. Whereas if you look at the second half of the decade, it is credit penetration. Of course, it continues to be deposit led, but credit has significantly overtaken branch penetration. So the branchless banking piece is something that's definitely playing out. I would say insurance would also be a significant contributor. And one of the reasons why we are still holding back the 2020 and 2021 report is because the PMJJBY and PMSBY, this data is still something that we are in the process of sourcing, I would say. Um, so, uh, so credit is something that is catching up. The CAGR of credit has been the maximum in the last few years, followed by deposit and then followed by branch. So that's in terms of the dimension. In terms of geography, when we started out in 2011, I would say, of course, South was leading and Northeast was lagging. The gap between South and Northeast continues to be as wide. Okay, while both have gone up, the jaw hasn't significantly narrowed, I would say. So that's something that we need to watch out for. However, I would say the northeast, east, and central region, they are almost, on the same page, same point. So it's kind of converging, the growth in terms of regions at regional level. If you look at the top 50 and bottom 50 districts, uh, particularly top 50. In 2011, there were 7 states. Of course, it was again, dominated by districts from southern part of the country, with almost 40 districts coming from south of India, and remaining 10 districts being represented, 7 states being represented by 10 districts. Whereas if you look at the latest workings, I would say that the number of states which are now getting featured in the top 50 are 14, and the number of districts which are not part of southern, not from south of India, is beyond 20. So there definitely seems to be little more broad-based progress, across different regions, and that's the beauty, I would say, of getting into granularity of the data. Yeah.
Okay, thanks a lot for that, Maya. When you talk about granularity, it's also about getting into the specifics of the consumers and the customers. So, Sania, I'll just go back to you. Um, that's, it's been spoken even in the previous segment, is that we've had income shocks from inflation, we've had natural disasters, we've had lingering economic impacts of COVID-19, which have quite compounded financial stress. So could you tell us a little bit more about this aspect of stress from the fintechs data that we have? And what role do you think that the public and private sector can play towards mitigating these vulnerabilities?
Thanks. So that's a very fair question, and I think it was also discussed quite a bit, or at least has become the theme of our discussion from our morning session. Let me drill that down a little bit more and maybe use some data to explain what we found. So we know that poor and women are more likely to face income shocks because they don't have any financial resources to sort of go back to when an emergency happens. So we collected data from the last few years and found that most of the adults in India are constantly worried about health expenses. Then there's school fees and other kinds of expenses, but the main theme has been around health. So we asked them, if you had to come up with emergency funds in the next 30 days, which is, let's say, about 7,700 Indian rupees, what would you do and who would you go to? And 1 in 2 adults in India said that they could not come up with these funds. And that really speaks to their resilience or their ability to tap into any kind of resources when an emergency happens. And then if you look at this figure here, but also just speaking from the numbers, women were significantly less likely to come up to say that they could come up with these funds. And even when they said that they could, the sources that they went to were family or friends, or they said they could just work more to get more funds, or they could sell assets. We see less of that, but the first two, the more informal but also unreliable sources, seem to be some of the main themes that they always find. So what this points to is that if we can think about products that encourage savings, insurance, provide easy access to credit, it can really help people anticipate some of these shocks and can help them become more resilient. One example that we find from our data is that about a third of adults in India are just keeping money in their account. So they're not using it for anything else and they're just storing it. So if you give them access to smart savings products, you could actually capitalize those resources and help them use those resources when an emergency happens. I think both private and the public sector can play an important role, but we definitely see a lot of benefits coming from providing saving accounts or providing insurance products through better food security, better household decisions, spending towards health, all of these things which really contribute towards resilience in times of an income shock.
Right. Okay. Thanks for that. And since you brought out the point about women being affected much more, I think it naturally leads me to Kalpana to ask what do you feel are the most important steps at this point to close the gender gap in usage of financial services.
No, morning everyone, and thanks Axis and thanks Sumita for moderating this, and of course, wonderful to be a part of this panel. Uh, Clearly, access is not an issue, and I think we've heard that again and again and again. And usage is definitely a critical challenge. And of course, all this data, which Sania showed, etc., very clearly point to the fact that women, struggle even more from a usage perspective. While inactivity rates are close to 35%, for India, there's a clear 8% difference between men and women when it comes to actual usage. Our work at the ground, and the way we look at usage informs us, that there are three aspects. And I was very glad that Mr. Vaidyanathan brought out that point much earlier on in the morning session, which was about the business opportunity. So how to look at usage and the whole inclusion, not from a CSR or from a marginal, activity, but clearly seeing the business opportunity in investing in the women. So this is a conversation that we have with the FSPs that we do work with. Of late, we've been doing a lot of work with the public sector banks, and the conversation that we have with them, based on the work that we did with, three large public sector banks, was that we came up with this figure of 2,500 rupees as as something that stays in the bank. If we are able to encourage the woman to get into the formal savings account, and if you keep providing nudges, and that's a very critical piece. I mean, it's not just a one-time effort. And if you are able to provide her with the nudges so that she remains in the formal system for a period of time, we find the average balance to be about 2,500 or so. And so even if you take 10 crores of the 25 odd crore Jandan women accounts, 55% of, 45 crores, etc. The clear sticky CASA opportunity of 25,000 crores sitting on the table. And so when we start talking business opportunity, then the banks start listening. Of course, we do have people like Vaidyanathan who are saying that they're already doing it, but we still feel that this is something that that needs to be brought sharply, especially when it comes to women. Commitment for financial inclusion, of course, exists, but somewhere in that whole conversation, the fact that we need to be doing more for women kind of gets lost. And so, therefore, when we step in and work with these players, we keep bringing out this point. The second one, of course, as I was mentioning, was, do we have appropriate products and solutions for the women? I mean, when we design for financial inclusion, we're of course very conscious about what needs to be done for ensuring there is financial inclusion. But women need a little bit more attention. And the way they approach and the way the conversations happen with them, the communication happens with them. You saw the, Sania's earlier chart about how women don't feel welcome. Women don't feel banks are for them. They feel that they have very small amounts, and banks would not be interested in them. So there are a lot of barriers. I mean, in addition to the physical barrier of distance and things like that, there are huge mental barriers. And so therefore the communication that needs to be targeted for the women, etc., needs to be distinctly different. And our experience, has been that when you do that work at the ground level, and mentoring works, when women are the best ambassadors. One of the things that we've done research with thousands of women, women need a little more time to get convinced, but when convinced, they will ensure, that they remain invested in that product. But do we have the patience? So how do we actually convince with the appropriate tools and things like that is something. And our examples come from, in Ujivan, as I said, the nudging. And it's all based on evidence. I mean, we are answerable to our donors. In the case of an Ujivan bank, we figured that, if there is a share of wallet in the formal versus informal, if there were no nudges, only 37% of the share of wallet, was with the formal system. In the same 1 year period, when we did it with the group with which we did the nudges, 72%, so literally double of their savings, share of wallet, actually remained in the formal system. So clearly this works. I mean, and our objective has also been to test, pilot, roll out, and then ensure that it remains with the, as stakeholders, we need to ensure that it remains in the system. So the banks need to actually adopt it once we leave, and actually make it, live in the system, so to speak of. That's as far as savings is concerned. I mean, Maya spoke about insurance. I'm waiting to see the report, because the same challenge that Sumita you spoke about, and in our experience, along with the savings bank, the Jandan, and we work with millions of Jandan accounts. The receptivity to the security, social security products, phenomenal among women. But women don't understand how it works for them. They don't understand the concept of insurance, and so we've come up with some really very interesting ideas in which you explain the concept of insurance to them. And I can tell you, I mean, we've managed to show 3x, 5x, 7x growth in terms of microinsurance and micropension penetration when we actually speak to these women. So important to have that in mind in terms of the narrative to approach, insurance, etc. The third piece, of course, is credit in terms of the journey. And we work with, private players. We work with digital MSME lenders, etc. And of course, we've recently come out with a scorecard which talks about, the unconscious biases that exist, when it comes to lending to women. I mean, of course, it makes business sense. I mean, we've all heard about the NPA percentages being better for women, etc. So it's not that, that they're not aware of it. But still, there is a huge portfolio. I mean, in the portfolio, the gap between men and women is phenomenal. I mean, it's like 8 to 10% compared to like and when you peel the onion, you realize that there are biases at every stage, right from the sourcing to how the woman inquires about the rates. She doesn't know, and she's not comfortable with going through those means. She has other means through which her preferred means of getting the information, clarifying, etc., are different. So, how do we bring these things, to light with these providers? Because the intent is there. You provide the tools, etc. So, this is some of the work that we've done on the usage space. Lot needs to be done, of course, and it's been a very interesting journey to see the literally moving, especially in the credit space. There was a very interesting one, how to get more women into the formal financial system, but equally also, this whole graduation loan that we're talking about, where, from group to individual, big challenge. We're working with, Mr. Raman spoke about it earlier. We're working with multiple organizations on this. There seems to be again, barriers in the minds, and this is evidenced by, you just look at the mudra penetration of women. It's a very telling story, right? At the lowest category, Shishu category, you have like, massive amounts of women. The minute you start going up the value chain, Tarun and Kishore, the highest one, which is 5 to 10 lakh, has 9% women borrowers. Tells you the story, right? So how to also, hold a hand and encourage above the value chain, right? So that's again another important work that, we've kind of undertaken. But these are areas that will genuinely work towards improving usage. Yeah.
Yeah. Thanks a lot, Kalpana. Unfortunately, we're kind of running short on time. Would have loved to hear much more from all of you. But since you're talking about women, another excluded segment that we are trying to get into play is rural India or Bharat. So I'll ask Pravina on this question because digital payments are key to our growth in financial inclusion and bringing them in. We've seen the Findex results. So NPCI, phenomenal work that you've been doing, brought out UPI 123 Pay and UPI Lite. So what are what are the gaps that you feel are needed at this point for bringing rural India into the fold?
Hey, so good afternoon and great to be here. Really heard great insights as we are coming through the speakers, and I think we could, there's so much action that can be taken from each of the points that have been made here. So when it comes to digital payments, and I think we are looking at a phase where there has been a reasonable quantum of penetration and usage, right? And then the hard work starts now, really. And I look at it in sort of two axes. On one side, if you look at how do we increase the number of users? And here, typically, to onboard onto UPI, you need a bank account, of course, but you also needed a debit card. And perhaps when we look at people who are very comfortable using a debit card and so on and so forth, that number is kind of already utilized. So the big piece is that now UPI, a user can onboard just using Aadhaar. So using their Aadhaar number, they can get onboarded onto UPI. So the ecosystem is just going live. About 21 banks are already live on this. I would think in the next few months, I expect this to be like this sort of slow tsunami that will take us by surprise very soon. So this is a big one. The next would be that there's a lot of discussion around feature phones versus smartphones and so on and so forth. But I like to look at it with a different lens. That primarily we are now also moving towards a segment which is not so comfortable. I think the report also alluded to that. Not so comfortable with the way in which a financial transaction has to take place today. So you tell them to download an app, open it, and then navigate it, and then put a pin and so on and so forth. They kind of do it. They're okay with looking at some videos and maybe even WhatsApp and things like that. But beyond that, they're not so comfortable. And I think that's really where that space of conversational payments, right? Using a phone, using the phone device, not through data, but through the more traditional voice network to complete a transaction. That's what 123 Pay is based on. And that's, I think, another big one when it comes to bringing on more users. As you look at the Bharat users and conversational payments right now, it's still in a phase where the experience is a little more like an IVR. You call a number, and with a couple of options, you can get to a point where I'm able to pay somebody and I put my PIN. But if we can, and we are working on that to move it into saying, how can we just have a conversation, right? I just call a number and I'm saying I want to pay Kalpana 200 rupees, and I'm able to finish it off in various languages and dialects. So I think that will be a really big game changer. And then when we look at the usage, which is to say that as people, and why will they, okay, somebody's tried it and they've got on board, but why will they continue to use it? You have to give them enough reasons to do so, which means that you've got to touch their life at every point that they want to make a payment. They're able to use this mechanism very comfortably, conveniently to do that. So beyond what we call P2P and like regular merchant transactions on P2M, what's next? So I think there we've got things like mandates and capital markets and all that, but that doesn't come so much to me probably in this space. Though mandates, which we call autopay, can really kick off when it comes to micro investments, micro insurance. So somebody wants to sign up for an insurance. They may not be able to pay X thousand per month or whatever it is, right? But the day they get their wages, they can pay 20 rupees. The day they don't get their wages, they don't have to pay. They can pause the auto pay. So the way I think the Reserve Bank has really come up with the regulation there puts a lot of power in the hands of the customer, and that can actually open up so many business models here when it comes to microtransactions. But the big one is getting credit on the rails of UPI. So I think the starting point has been made with RuPay credit card on UPI. And while there is a lot of plan in terms of how that can happen, if we can, because today it costs X to onboard a customer, issue them a card, and all of that has some level of friction and cost, and hence a card is given out only with like a 1 lakh, 2 lakh, 3 lakhs kind of a limit. Below that is not viable to the issuer to go through that process. But the moment you remove all that sort of cost out and uh, create a manifold impact of the kind of quantum of transactions that can be made, right? So from 5 million POS terminals on which a card can be used, this now goes into 100 million odd of a QR on which the card can now be used. So I think that will completely change the game. You can start giving out credit in sachets of 25,000, 10,000. It can be on demand. You can put power in the hands of the issuer, power in the hands of the customer. So this is an instrument, well regulated, highly reported, so on and so forth. RBI is really comfortable with it. But I think it's the starting point of getting credit on UPI. And we think with this phase of RuPay credit card, today 80 million cards, let's say 35, 40 million users, we should easily take this number of users to at least 100, 150 million in the months to come.
Okay, thanks a lot for that insight. So I think the next year coming ahead is going to be even more exponential for us. Pawan, coming to you, can you just zoom out for us and give us, looking at the larger picture, just a few gaps briefly that still constrain us, that are really critical, and where if you see policy and regulation can actually make a difference here.
So you're asking for increasing the usage or on data? Or
This,
both?
this portion is on the usage part.
Okay.
The second part is the data.
Okay, so let's do that. So I think on what we are seeing, the whole lot of comments being made, I think, but I think the key piece here is that India continues to be a cash-based economy. A large number of people, to the last count, about 400 million odd people, who are informal. And if they're going to be paid wages and other payments in cash, there's a very small chance that they will actually stand at a Kiko network and deposit the cash and do transactions out digitally. So I think the first question, and I think the first underlying thing here is that how do we get the informal workforce to get paid digitally? That's the first question. The other question is, even if this went and happened, and in the rural areas, people were onboarded on UPI by using an Aadhaar, where would they spend it? So there needs to be a consistent, in parallel effort to onboard merchants in rural areas. And it and there we have smaller merchants like what Alkesh was talking about in the morning, but nano merchants, very very small and tiny folks. How do we reach out to them and onboard them? And technology allows us to do that today, right? So if you've got an Aadhaar, if you've got a bank account, if you've got a phone, what stops you from self onboarding yourself? But then again, it's a process issue. It's a UX and UI issue, and how do you address that? I think the third one is around a little bit of a, not actually a little bit, a large amount of part of this is a deficit in trust, right? What happens if I make a wrong payment? How long will it take for me to get back my money? uh, what happens to charges being charged by the Kiko agents, which are not official charges? There are lots of these other questions in the minds of the consumer, which is holding her back. So, as an example, there was a study which was done during the pandemic on the Kiko network piece, where people still prefer to go to a bank branch, right? Instead in spite of having a Kiko network in the neighborhood, right? And there are several reasons for that. One of the reasons is, the banking world still continues to be in the realm of reporting amount of balances and the amount of credit given. Ask them how many new customers you went and added on, and you don't have the numbers. So, but on the other hand, if you look at the poor people, it's not about balances and credit. It's about the number of transactions, right? So if at a Kiko network point, you're going to do a throttling of number of transactions and saying that you are not allowed to transact here at the Kiko network or the BC network, but you may want to go to a bank branch and do that, it defeats the purpose, right? So I think this whole transition, by looking at it end to end instead of looking at it in piecemeal, to allow the customer to be able to do the thing that she wants to do in the time frame and when she wants to do it and how often she wants to do it, is very critical for allowing us to allow the freedom to her to do that. So when we spoke about that, I think the other issue is about exclusion, right? So we spoke about women who aren't transacting enough. Then we have geographies. The Northeast is a case in point, and Jammu Kashmir is a case in point where we don't have enough data, right? So we've already spoken about the need for data, and there is the Findex, and there is the, is the CRISIL index. The issue is that we need to do both on the supply side and demand side together. It doesn't make sense to do it either or. But either of this, we still need to ensure that there is some level of mystery shopping, as an example, which allows us to understand where things are breaking down. And the demand side surveys like the Findex or the CRISIL index doesn't allow us to see that, right? And it's about the perception of what the people think, and the reporting that is self-reporting, in my view, leaves some gaps in the middle of this. So we need to be able to address this. I think either the regulator or the SROs like an MFIN or the BCFI or other people should be able to undertake these mystery shopping by either geography or player or segment, to be able to address these needs and say this is what needs to get fixed to be able to address this. So I'm going to stop here. I think we guys are standing in the middle of lunch, and everybody else
Just
here.
have a, yeah. Okay, so thanks a lot for that, because what we've done now is you're bringing us to the second part of the conversation, which is about filling the data gaps, because we understand what gaps are there, we understand what the problems are, but how do we actually fix the gaps in the data? What kind of data gaps are we looking at? So I'll go back to Maya first. Right? What are the data challenges that you were talking about in your first part that is actually making your release difficult right now?
Yeah, there are several of them. So I'll bucket them in three categories. So first is, of course, the time lag. So in CRISIL Inclusives, the biggest contributor to data is Reserve Bank of India's portal. And there, I would say all the bank-led financial inclusion data gets updated with significant amount of time lag. For example, the 2021 financial year numbers, have just been updated, couple of months back. So it's a 15 to 18 month kind of time lag in terms of that data becoming available. And unless and until, and that's really the starting point for us, because that's the biggest source of our information, right? So that's one. Second is in terms of public and non-public um, availability of data. So for example, since CRISIL Inclusives is all about district level number, and that's what really kind of brings out insights, we find that a lot of places the data is the publicly available data is at either at national level or at max at state level. Okay, for example, third is inadequacy of data. For example, PFRDA. Okay, PFRDA only covers NPS and APY, the Atal Pension Yojana and the National Pension Scheme. It does not provide EPFO related data, and EPFO is actually has a very large number of PF contributors. So that leaves out a big section of people who have access to provident fund. So therefore, that's it doesn't really give a good representation of that dimension. Insurance, Sumita, the data that we get from IRDA, it does not cover PMJJBY and PMSBY numbers, which is I would say is the biggest driver of social security these days, because you go into villages and everybody talks about 20 रुपए का बीमा, 400 330 का पहले जो होता था 400 रुपए का बीमा, and lot of people have started accessing those social security and insurance schemes. That number is not there. That number is available on the Jan Suraksha portal, and it is at state level. So we are now looking at how can that be made available at district level. Then finally the challenge also comes from formation of new districts. Okay, so when we start, I mean the last number that we have published is it was for 666 districts, whereas already we have crossed 725 or 730 in terms of number of districts. So the new districts keep getting formed, and then the comparability of population data, for example, is the hardest part. Then we have to clean the data. Then across different sources, the district level data, even where it is available, the districts are not comparable, because some source may be looking at older definition of district and some sources may be looking at newer definition of district. So it's all over the place. And then despite of being a pro bono initiative, CRISIL really employs a huge analytical engine to clean the data, make it consistent, and then be able to come out with insights which are really usable and can be applied in policy making. Yeah.
Thanks a lot. I'll move to Praveena now because NPCI has been putting out a lot of data in the public domain, and I'm sure there are lots of demands for much, much more. So, can you just tell us what are your challenges that you have in collecting as well as in disseminating? Because I think we've heard that banks have sometimes have some issues about putting up activity of BC agents, for instance. Is there some possibility of aggregating it even at the district level?
Yeah, so great points on data, because I think without the right kind of data available easily in public domain, a lot of an identification of the problems to be solved and the kind of innovation that needs to drive the solutioning, will not move at the pace it needs to. So from our side, we've been trying to continuously look at what we have access to and what we can provide at an aggregated level. And I think we've looked at, of course, when the earlier draft of the data protection bill, etc., was there, we reviewed all of that and we said anonymized, aggregated is all possible. And then we sort of went back and also looked at what data we have. And we realized that we had a fair amount of this cleanup to do, while we have our specifications that call for a lot of data. In the past, a lot of data was marked as optional. So actually, when you look at it, there is no useful data there. And some of the data points in the sort of payment stream that were mandatory, but did not really participate in the credit and debit of the accounts, though mandatory, was not actually flowing through, or we were getting some garbage. We were getting really garbled kind of information. Somewhere it was breaking through. It had not been used in the past, so it had not been reviewed. So a lot of that sort of first, cleanup work had to happen, which is not just us; it's the entire banking, fintech, payment ecosystem. And now I think there's a good amount of data coming out on a regular basis, and we are constantly looking at how to move that forward. So on one hand is really data that gives us the confidence in really the performance of the system, and then there is of course data on sort of volume and so on and so forth. Now the question that I keep getting asked, and I really wish we had the ability to support, is data on geographic breakups, right? So that sort of geotagging of the data. So I think we're exploring it, but it has its own privacy concerns. So when there's used to be an ATM, the PIN code of the ATM is available. When it used to be the old POS machines, they used to actually also have an address to which they're associated. The ATM may be fairly stable, but nothing is stationary anymore. So you can't rely on that PIN code data to do any geographic analysis. And actual tagging and sort of processing and passing of the geotag information is not mandatory as we speak. So that's a bit of a blind spot. And if we could solve for that, I think that's a really big one. And what we don't have access to, because what we have access to is the payment flow and whatever we can make out of the payment flow. So we don't know anything about the demographic of the customer. So somebody was talking me male, female, age groups, educational status. Yeah, for that we'll have to do an industry level sort of stack thing.
Thanks. Okay, really quickly, because we're getting time constraints on us, but I have two questions still. Very briefly, Kalpana, could you tell us what are the kinds of gender disaggregated data that you would like to see? From whom? And then we'll close up with Pawan's comments.
Yeah. I think along with gender disaggregated data, I agree with the panel in terms of the, as much real-time data as possible as well. I think both are in our wish list because, you're not able to, you're able to take broad strategic calls, say for instance based on global findex, because which market we need to be, etc., is something that we at Women's World Banking look at very seriously. But that comes every 4 years, so you're not able to take decisions at the ground level. Gender disaggregated data for us, Maya spoke to it earlier as well. For us, anything on usage, I mean, usage carries 2/3 of the weightage of RBI index, right? I mean, that's how much RBI thinks it's important to move the dial of financial inclusion. But and we know for a fact that the FSPs are asked to provide fairly elaborate data to the regulator. But what would be, and this is a regulator that we all respect for the kind of stance and the leadership, be it technology, be it an enabling environment. I think it's been out there. One big wish list would be that if they can actually publish what they get from the FSPs, if they make it available to make it transparent and available to all of us. Like Ravina mentioned earlier, like it would help us actually decide what needs to be done at the ground level. The second piece is, of course, the PMJDY accounts, right? I mean, uh, there exists a rural and an urban breakup, which means that probably there is information that is being collected. But I would just, my top of the list would be gender disaggregated data for PMJDY, usage piece. That's something that is, we've been looking at. I'm trying to look at claims ratio. I'm trying to look at persistency, because those are very important indices as far as you don't want to be mis-selling it to the people concerned. Like just taking that 1-year policy is actually disservice to the customer. Persistency is such an important element of quality. Now, those kind of details, and along with gender, if that's available, that would go a long way in pushing the agenda. Yeah, thank you.
Okay, thanks a lot, Kalpana. Okay, so Pawan, just for you to wrap up our session for us. Um, it's like, what can we do as an industry as a whole to actually catalyze this data collection and share?
That's a very wide,
Wide
open
question.
question.
That's for you.
I don't know the answer to that, but let me try. There's an effort which is underway already, which we are working with the ISB in trying to first collect what all the other supply side data is available, which are lying in silos, and bringing them together. I think that exercise will be a great, it will provide some great insight into doing this. I think the other is, as FSPs together and as industry associations together, we should take on the responsibility of publishing the data. Right. So if you take the MFIN as of today, MFIN goes and publishes a lot of disaggregates of data, anonymous though, but you get a fairly good understanding of what's happening in that space, right? What does it take for us to do that? And we also have seen some of the private sector folks in the payments industry specifically talk about the number of pin codes that they're available at, what kind of transactions happening there, what are the, so they all have the data. Now the issue is, what do you need to do with the data and present it in a way that everybody stands to gain from it, right? it so data itself will need to be a public good. Yeah. And the data is of the consumer. So as an example, if you take the account aggregator today, the account aggregator today has access to almost 1 billion accounts, right? And will they be allowed to, and should they be allowed to publish extracts of that data coming from who owns that account, to the number of transactions in that account, to saying what kind of transactions happen, or to what kind of merchants that was used to, can be made available if they want to do this. And plus it's anonymous, so I think that there's scope of doing that activity. um, so I think as an industry, we all need to come together and talk about data for good, right? and which is going to help underline how do we use that data to identify gaps in products and service, and in terms of availability to those the segments we want to address. As in the morning kind of session, people were talking about small scale producers, MSMEs, tiny and nano stores, SHG and the women there, SHG entrepreneurs there. There are a lot of segments. While we talk on the segments on one side, the data is not supporting any of that today, right? So we need to build those linkages and those kind of bridges to be able to address those needs. Otherwise, we'll keep talking about esoteric stuff about addressing the needs of these people without actually seeing how is it changing the lives of them at a national kind of level. Otherwise, it'll be one survey at a time, two surveys at a time, and how many of them can you do for 140 crore individual, or for those people who are from broad 1.4 billion people, right? It's going to be a tough one. I think we need to come together as a industry. I would not say industry. Industry is an ecosystem where we come together, and it needs to get highlighted right to the top, because everything else will come from this, and it's the fountainhead, and we need to ensure that now the fountain has enough water to get sprayed all across the place.
Okay, thanks a ton, Pawan. And I think all of us, everyone on the panel has given us excellent pointers going ahead. We've done a lot. We've had an amazing, last few years. And I think we have a very, very bright future ahead if we can all just continue to just stay connected and on the right path, right? Thank you so much. Thanks you.
Thank you very much, panelists, for sharing their experiences and insights in the session. And a special word of thanks to the moderator, Ms. Sumita Khalid, for her deft moderation. We have small mementos for the speakers as a token of our appreciation for their time and inputs. I request the team to kindly hand them over as they leave the stage. We will take a short break now, and after that, we'll have 4 parallel technical sessions and tracks. Please take a look at the agenda in the resource book to identify which theme most interests you and join us back in 15 minutes. So we have a 15-minute tea break, and then we will have the technical sessions in the various halls. So all the halls are going to be divided, and you can just see the session of your choice. So ladies and gentlemen, thank you very much for being here with us. Please be back to the session of your choice in 15 minutes from now. Thank you very much.